Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've joined us on Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. And it's not looking very good on the markets. The frontline indices are in the red, but we are doing better than the rest of the world at this time. So that is some bit of solace really coming in. Nifty 50 just about holding on to that 10,800 levels. In fact, has just slipped below that. And mid-caps, which were with some gains in the last 10 minutes of gain, 10 minutes of trade, have really slipped further and heading towards the red zone as well. So markets looking slightly weakish than they were earlier and heading to the low point of the day. It's ICICI Bank and Nifty Bank, which is a big drag. But on the other hand, remember, Infosys is the one which is really keeping the markets alive at this point, Mangalam.
Absolutely. So we'll talk about our markets, but just keep an eye out on the global markets, because while we're down about 0.25%, we're seeing much sharper declines in all the other markets. In fact, for instance, Hang Seng, that one closed at around 400 points lower. The Shanghai too lower by about 1%. That index sitting on a near 2-year low. Kospi at one point, I remember, was trading with a gain of about 0.5%, closed absolutely flat, and we're seeing sharp cuts across the other Asian indices too. And as we speak, the European markets, which showed a sharp up move on Friday's trading session, have now reversed all of those cuts. The key underperformer there being the German index. Remember, German Chancellor Angela Merkel had said she would be looking to do a direct deal with different European countries to solve the migration problem, given that they did not manage to reach a European-wide agreement. So that index under pressure, also led lower by automakers. Trump had tweeted over the weekend that he is likely to impose a 20% duty on all the automobiles coming in from Europe. So we're seeing some cuts come by on indices which are heavily weighted by auto stocks. The likes of FTSE MIB Italian index should come up for you as well. That one sitting with a cut of about 1.5%. But let's move on to some political developments. In Turkey, Tayyip Erdogan has been re-elected as the country's president, while an alliance led by his ruling party has also won a majority in the parliament. Over 59 million people voted on Sunday, and the vote ushers in a powerful new executive presidency in line with constitutional changes approved in a referendum last year. However, the opposition is still not conceding.
All right, let's come back home and talk about the largest merger and the biggest transaction that the street has seen, which will create the largest telecom company in India. But that is seeing a lot of niggling worries at this point and also uncertainties coming in. In fact, the Idea Cellular stock is down over 6%, considering the uncertainty in terms of the approvals coming in for the merger going forward. So reports have suggested that an additional 4,700 crore rupees of charges could be levied by the Department of Telecommunications on Vodafone India. But we connected with Vodafone and they have written to CNBC TV18 denying any such letter from the DOT, and they have also said that it is not in adherence with the M&A guidelines in the country and that they are expecting to receive the final approvals shortly. Now, what is the fallout of this particular uncertainty? We do gather from sources with direct knowledge that the internal targets by Idea as well as Vodafone could have been pushed for the merger execution from the first half of this calendar year to about August this year. Though the amount from DOT as well as that particular date are really moving and dependent on various factors, so that can really change. It's subject to changes because of various other parties involved in the government involvement as well. But another fallout is also the attrition rates, and we do gather that Vodafone India could be facing severe attrition of double digit, and in fact Vodafone, in its comment to CNBC TV18, has written that they do hope that the employees would agree that the larger base of Voda and Idea merger would create more opportunities. So this particular merger has to be on our radar, and Vodafone clearly denying any such fresh charges by Department of Telecommunications. We are yet to hear from the government on this one.
All right. Meanwhile, just keep an eye out on the ticker. Just in, monsoon session of the Parliament to be held from July 18th to August 10th. So we will keep an eye out on developments that take place there. A lot of important bills lined up for the monsoon session. But one stock which is under pressure in today's trading session, ICICI Bank, virtually at the low point of the day as we speak, sitting with a cut of about 3%, and this despite the management clarification on the whistleblower allegations of issues in the company's financial statements. Sonal Sachdev joins in with more details. Sonal.
The litany of woes continues. ICICI Bank has seen this, several reports of irregularities coming out. Whistleblower, like you said, several whistleblower complaints. The latest relates to a complaint received anonymously at the end of March relating to 31 accounts where it was claimed that there was irregular reporting and not adequate provisioning being done. In response to which the bank indicated that while there was a delay, they had accounted for these accounts by the end of December last year, and implying that the books presently are in order. However, there's also a complaint lodged about delays in filings with the SEC, which is again a serious sort of matter. So this is basically keeping the stock weighed down. You think things are over, things are getting sorted. You have a new COO that's been appointed, but it keeps coming back.
Oh yes, that particular stock is down. But Sonal, stay on with us. Another stock that is on our radar is PNB Housing Finance. Of course, we know that PNB has given an approval to sell its non-core assets, which also includes PNB Housing Finance. But the stock has been running up on the basis of reports which suggest that several companies are ready and queuing up to acquire this company. Give us an update on that.
As far as PNB Housing Finance is concerned, there were reports which we have not verified, which indicated that two leading players, HDFC and that's HDFC Limited and Kotak Mahindra Bank, were eyeing a strategic sort of sale in the lender. It is known that Punjab National Bank and Carlyle, the private equity investor, are looking to sort of cash out of PNB Housing Finance. But we have heard from HDFC. They have indicated that they have not expressed any interest in acquiring PNB Housing Finance. So it's not clear how far or how true this report is. But that's really positive, because if any of these players are looking at PNB Housing Finance, it would mean the lender moving to stronger hands.
All right, Sonal, thanks a lot for that. With that, we'll step into the short break. Come back, we focus on Tata Motors, a stock that has lost about 26% from its 52-week high. Is it a value pick or a value trap? We'll tell you that on the other side. Well, we're sitting below the 10,800 mark for the Nifty right now, 10,790 thereabouts. And for the Sensex itself, we've lost about 100 points. Keep an eye on the Nifty Bank too, lost about 100 points. And from the frontline space, the stock that has just lost some amount of traction from the high point of the day, we have Wipro, which is closing in on the lower end of today's trading session, as well as the advanced decline chart. That one should come up for you. Nearly two stocks in the red for one in the green. The two lines are as far wide as they can be in today's trading session so far. Sale from the broader markets at the low point of the day. So just keep an eye out on individual stocks. Remember, this is the expiry week, and we will watch out for how the market plays out. One stock on our radar, Tata Motors. At the JLR Investor Day, the company laid out a comprehensive turnaround plan for JLR. Rima now joins in with the key takeaways. Rima?
First ever investor meet by JLR held on Friday, where the company is given a medium-term outlook on sales volumes. They say it will be faster than the industry growth, at least in the premium segment. On margins, they are looking to target EBIT margins between 4 to 7% versus 4.2% that they clocked in last year, and an annual capex guidance of £4.5 billion over FY19 to FY21. While the margin guidance was known, this improvement in margins, the company articulated how they will achieve it. So it's cost-cutting initiatives, operating leverages, as well as new product launches. CLSA believes JLR also sounded cautious on the demand outlook. So according to them, FY18 volume growth was lower than expected due to diesel uncertainty, Brexit, as well as high incentives in North America. Also, they believe that high capex spend will put pressure on the cash flow. So CLSA remains negative on the stock given the multiple headwinds. They also think the stock is not cheap given where its global peers like Daimler and BMW's valuations are trading at. Nomura, on the other hand, maintains a buy with a target price of 490. But the bigger risk for the company will be the imposition of high tariffs on exports to the US coming in from EU and UK.
All right, thanks Rima for that, but that is putting a lot of pressure on Tata Motors as a stock at the low point of the day. Another counter on my radar, which is at the low point of the day, is DLF and some corporate action there. Earlier today, we spoke with Ashok Tyagi, who's the group CFO of DLF, to know if the second half of the year will provide the much needed impetus to their sales volumes. Here's a snippet of that conversation.
We did about, I think, about 750 odd crores of net sales in the January to March quarter, and clearly the guidance that we have given in our last analyst conference is that we are now looking at on a cautious basis at about 2,500 odd crores of sales during the fiscal going forward. Because we will be coming up with the June results, I would not be able to deliver you a specific guidance of how much is the April to June, but we have clearly said that I think in each quarter we should be looking at between 500 to 600 crores a quarter of the net sales booking.
All right, it's time to hunt for value now, and today we focus on the metal space, and Mangalam has done some exhaustive analysis. Which is the stock that you're focusing on, Mangalam, today?
So after a stellar rally of nearly 185% between 2016 and 2017, Tata Steel, that one's corrected about 20% in 2018 so far, lost about a quarter of its market cap from its 52-week high levels of close to 750 rupees. Now the street believes there are these reasons for the fall. Opposition by ThyssenKrupp employee union to a joint venture with Tata's European business, fears that Tata Steel may make revisions to this joint venture deal, and the negative sentiment on the metal stocks owing to a possible trade disruption due to global tariff wars are the key reasons for this fall. Add to that, the recent rally in the dollar index all the way from 90 to 95 didn't do too well for the metals across the world either. Remember, Tata Steel's European business has been an overhang on the company, with nearly 62% of the company's liabilities and only 16.5% of its earnings before interest and tax. And remember, the company's consolidated debt to equity of 1.5 times will rise with the new acquisitions via the IBC, pressuring their balance sheet in the near term. This perhaps explains the falls, but there are quite a few possible triggers for reversal. The first one, of course, is the speedy resolution of ThyssenKrupp joint venture without any big adjustments. That is something the street would like. Benefits of Bhushan Steel acquisition becoming visible, and winning this bid for Bhushan Power and Steel will benefit the company on account of lower expansion costs as well as time savings. The consolidation in the sector as a whole as a result of this would lead to better pricing, and there is a strong demand cycle despite the tariff wars that are taking place, and any clarity on the debt management plan as well as future of the European business will be taken well by the street. Brokerages by and large positive on Tata Steel. There you have it. Nearly 23 of the brokerages that we have are either a buy or an outperform rating on the stock, as against 4 which are either hold or just 1 underperform. So some brokerage calls should come up for you on your screen. We have Jefferies with a hold rating, 584 rupees target price. We have Edelweiss buy on the stock with a target price of 903, as well as Kotak recommends another add on Tata Steel with a 12-month price target of 710 rupees. Valuation wise, the stock does trade at a discount to its peers, so about 7.5 times FY19 price to earnings, 7 times FY20 price to earnings. So with these triggers in place as well as the reasons for the fall, it will be very interesting to see how the street treats this recent correction in Tata Steel's stock price. Is there value, or after a stellar rally in the last 2 years, all the positives are priced in? That is something only time will tell. But before I wrap, a quick disclaimer: this is not a stock recommendation for buy or sell, just some research that I've put out.
All right, thanks Mangalam for that exhaustive work done on Tata Steel, but there's a lot of deal flow around that particular counter that is, not very far away from a 52-week low figures, and a lot of the fall has also come in the last 1 month of trade for Tata Steel. Now remember, two things that really define it, and that is one, the uncertainty around ThyssenKrupp transaction, because some of the activist shareholders have entered there, and if Thyssen does not solve for their European problems, then will Bhushan Steel acquisition really makes sense with the kind of debt they will take. So that needs to be watched out for at this time, Mangalam, on that.
All right.
All right, so with that, we'll slip into a short break. But up next, we talk about the statewide plastic ban by the Devendra Fadnavis government in the state of Maharashtra and the job impact. Welcome back. Take a look at the markets, and given up the 10,800 levels for good, but mid-cap index has perked up slightly in the last few minutes of trade. In fact, some of the counters which have shown some bit of gains is Indian Hotels, SRF, Page Industries. They are on my radar at this point. But there's a lot of news development really to watch out for. Two-day AIIB meeting that starts today, and the theme of the third annual meeting of Asian Infrastructure Investment Bank is mobilizing the finances for infrastructure sector. And my colleague Priya Sheth has been really tracking all the developments there very, very closely, gets us this ground check.
We're at the third annual meeting of the Asian Infrastructure Investment Bank here in Mumbai. The theme for the convention this time around is mobilizing finance for infrastructure. This essentially means improving social as well as economic outcomes in Asia. Now, do remember that India is the second largest shareholder as far as the AIB is concerned after China, and that makes India a sweet spot for investments flowing in from all the global investors. In fact, it's counted as $1.5 trillion in terms of investment are required for India over the next 10 years to bridge the infrastructure deficit. But of course, there are likely to be several infrastructure partnerships that are likely to be finalized here during this convention. Of course, AIB has also agreed to invest about $200 million into the NIIF fund of funds. That was an announcement that has been made over the last 2 days. And there are several other financial partnerships that will revolve around the urban transport as well as the power sectors is what we are picking up. About $1.2 billion has already been committed, and about $1.9 billion is likely to be in the pipeline. So this is a space that we will continue to watch. Of course, the big day is tomorrow when Prime Minister Narendra Modi will be addressing the board, and that's a space that we will continue to track from here.
Absolutely, Priya. Thanks a lot for that. In fact, from the sidelines of the same AIIB meeting, Piyush Goyal, the Union Minister for Railways, Coal, Finance as well as Corporate Affairs, believes that a robust framework which is predictable, simple and easy to navigate, also very stable, is necessary for infrastructure development. Listen in.
Growing need for multi-development banks in the Asian context also resonates very well with the thrust that the Modi government is giving to creating sustainable infrastructure in the country. We do believe that a robust framework which is predictable, simple, easy to navigate and also very stable is necessary for infrastructure to come into the country, investment to come into the country. We also believe that highest levels of probity, transparency and accountability are very important ingredients for the success of investments in infrastructure. With the new land acquisition laws giving 4 times the market value for the land that is acquired, by and large, we have not faced any major stress in land acquisition anymore in the country. There are pockets where off and on a little more engagement is required. I have discussed with both the Chief Ministers of Maharashtra and Gujarat, and I think the discussions are at an advanced stage. The environmental and social impact studies either have been completed or are nearing completion, and I personally don't see any stress in getting the land.
All right, then on to some important news. Then Maharashtra government has enforced a statewide ban on use of plastic materials. Our colleague Ashwini caught up with Nimit Putamya, the General Secretary of the Plastic Bag Manufacturers Association of India, to understand the impact on jobs. Listen in.
The current impact in the industry is we have, almost 2,500 factories have closed down. Almost 300,000 people or 3 lakh people have lost their job directly. Indirect unemployment would be more than 1 million people. And almost 15,000 crores worth of investment has gone, is of no use right now.
Right. So what is that you're asking the government now? Because you had been given 3 months time to get rid of your existing stock and come out with some alternatives to plastic. So what is that right now that you want from the government?
Ma'am, we had requested the government that the current regulation of 50 microns should be in place. We have requested the government that the alternatives are not good for the environment. So we've requested the government to give us at least 7 years time to phase out this product in a phased manner. And then we get, by that time, we'll have some alternative products in the market.
Now the ban is already in place. So what is your next move? What are you planning to do with the jobs that have been lost, the industry, the impact that your industry has taken? So what is the next step that you're planning to take?
So actually we are still hopeful, like we are in continuous talk with the state government. State government had deputed an expert committee. I was also part of the expert committee, and we have made a lot of recommendations through the expert committee to the empowerment committee chaired by Shri Honorable Ramdas Kadamji, the Minister for Environment. And I hope there is a meeting on Wednesday on 27th of this month where a lot of products may be removed from the ban of this current position.
So if you could tell us what are some of the products that might be the ban might be lifted on them, what are those?
So something like all those bags used by Kirana stores or your small industries or like Lijjat Papad and all. I mean, those bags we are hopeful that they will be removed from the ban.
Okay, and the meeting is on 27th?
Yes, the Empowerment Committee meeting is on the 27th.
All right, there are flashes on our screens, and Interglobe Aviation is the stock in focus. This is the second resignation really coming in the last few months as far as the top leadership is concerned for airline Indigo, which is owned by and operated by Interglobe Aviation. So Reuters has reported, and the report suggests that the chief strategy officer of Indigo Airlines has resigned with effect from July 15th. Now remember, Aditya Ghosh, the CEO, had resigned in end April. And after that, this is the second very big resignation that could be coming in. And this is an important news development to be watched out for. That stock has cracked in trade and is down almost 1.8% as we speak. As far as the overall markets are concerned, still remain weakish. It's the expiry week, but cement sector, on the back of reports of cement prices rising, is really bullish at this point. With that, it's a wrap on Business Lunch. Mid-Cap Radar comes up next.